Hey everybody, it's your boy Wayne here, bringing you guys another weekly wheel and other options update. We need to go ahead and kick things off with a correction. Take a look here at last week's number. This should have been the final figure, $27,375. I actually made a mistake with June's numbers and I didn't add the amount correctly. There was a contract that I closed out early, and so I want to go ahead and just make that distinction before we begin. But with that, we were only off by $11 or so. So $27,375. That should have been the number we left off last week. This week, we go from $27,000 to now $28,719. That is the correct and updated number of premium that I've earned. That means last week, baby, I made over $1,300 in premium. Let's go ahead and keep this video nice, short, and sweet. We're going to start things off on the covered call side. You guys can see I wrote 5 covered calls this past week that began on July 31st. Nothing really eventful to point out. As I mentioned before, I do not expect to make as much money with premium when it comes to covered calls, and that's because a lot of my go-to positions, Amazon, Apple, Microsoft, Tesla, I've had to roll and push out those positions by several months, even a year. And so this is the problem when the stock price goes above the strike price. If you do not want those shares called away, you can always roll out. But depending on that new strike price, you might have to roll out not just by a few weeks, but several months, maybe even a year. And so that's the case. And so now you're kind of seeing maybe stocks that I normally wouldn't talk about too much. Chewy, Tesla, BCTX, and Target. Now, Target and Tesla are certainly stocks that I continue to write covered calls on a normal basis. It's interesting, though, because the Tesla position, this is really me writing a covered call against my Leaps purchase. So all of these I am writing at or above my cost basis, but I do not want the Leaps call to be exercised because that would mean I would lose the Leaps purchase option. Not to be too confusing, but this is something that I'm choosing more conservative strike prices. Now, BCTX, truth be told, this is the position I've been long on since early 2022. I really chose it because of the cheaper stock price, but now I'm completely content if these shares of BCTX were to be called away. I would be completely happy, and I am selling just at my cost basis. The real money for me occurred on the cash secured put side. Let me go ahead and highlight all of the contracts that I wrote this past week, and you guys will see 13 was my lucky number when it comes to that $1,340 plus. Now you guys are going to notice some favorites of mine: Netflix, Nvidia, we've got Tesla, we've got Amazon in there, but I also sprinkled in a fewer new stocks to my cash secured put rotation. We've got AI, we've got Lyft, we've got Williams-Sonoma, and so all of these I hope are going to be a successful venture for me. So let's go ahead and focus on Amazon. If you didn't know, last week was earnings, and so I decided to write a cash secured put, hoping to cash in on what was ultimately easy premium. Now, I chose a strike price of $125, which means I had to have $12,500 in collateral. And sure enough, Amazon was able to beat on earnings, which means that open premium that I received for $132, the value of that contract went down significantly the day after Amazon reported. And so I was able to buy to close early, paying back just $1, and then I was able to net and subsequently pocket $131. Nvidia, you guys can see I made $188 from that contract last week, and then I've opened up a new Nvidia position, this time with a strike price of $435, which means, again, I have to have $43,500 in collateral, and I earned $236. If you guys are somewhat new to these updates, everything that you see in gray or orange reflects that that particular contract is no longer open. Everything that you see in white is going to be an open position. Now, Celsius reports earnings next week. That's why we've got significantly elevated premium, and I'm really hoping that Celsius yet again beats on earnings. If they do, this $390 could be one of my most profitable contracts this week, so you guys will have to stay tuned. Let's go ahead and update those numbers once again. When we left off, we were at $27,375. You guys are going to see July and August is going to be updated here. And we go from July finishing out with $6,819 on the covered call side, and that's for 28 contracts. Truth be told, guys, there was at least one rolled position in there. That's why this number is so high. Now, on the cash secured put side, I'd made $5,485 for those 43 contracts that I wrote throughout the month of July. That was a really, really great month. In fact, it's my all-time best month when it comes to cash secured puts. August is off to a great start. You guys see here, I didn't write too much the first week of August, but I did earn $48 for 3 contracts that I wrote. Of course, as you guys see, the big number is going to come from the first week of selling cash secured puts in August, in which I made $1,234 for those 10 contracts. So that brings us up to a new grand total of $28,719. Again, that's an increase from last week of $1,344. Hopefully you guys are enjoying this content. If you haven't done so already, make sure you guys are subscribing, make sure you guys are liking, and of course, we'll see you on the next one.